Hi, everyone. Welcome to Market Kickoff. I'm your host, Anne Marie. As soon as you see my face, it's nice to be here. We got a lot going on. It's funny looking at that picture of me. It's so big. Yeesh. All right, let's start. Let's talk a little bit about what happened last week. So, if we are staring down the S&P 500 for the entire week, we see price action that is pretty split. That fancy word we use is bifurcated. And what we end up seeing is a sideways. Some things are moving up, some things are moving down underneath, inside of each index. So that's really what we're seeing. We're seeing a lot of noise. So what I wanted to do first off is very quickly go through, wait, what are we staring down in terms of sideways formations? And what is price action doing? So Hoop sent me a note. Coach Hoop sent me a note early this morning, and he said, hey, listen, open interest in the ES really climbed on Friday. And so this tells us there's participation, more participation, sitting inside of the index here than we might have thought, because we are seeing a lot of selling coming into the day. But I read a really great article, and I put it in a couple of our Topstep channels, that talks about why big downward flow volume doesn't always mean a sell-off, because of the natural rhythm of what prices need to do when big orders come in. And so it was really pretty interesting. It widened my thought process out just a little bit to say, hey, listen, don't just be bearish, because at the end of every day you're seeing tons of 500 lots dropping off. That doesn't necessarily mean that things are breaking down. So what is my overall thought? My overall thought is that we're going to probably have one more big spike up, and then we're going to have ourselves a little bit of a dribble down. So I don't know how long the big spike up goes. I don't know how long the dribble goes, but we've got a lot of geopolitical turmoil, and that's what's really keeping our metals afloat. But let's look at the ES on the weekly. If we're staring this down and we take a look at a simple box, oh, for heaven's sakes. If we take a look at a rectangle and we just draw that rectangle out, we can see that for weeks and weeks, we've been caught in this area, and now we're at the very bottom. So what do we want to stare down tomorrow, or even tonight? We want to see how well 6805 holds. We really do. Maybe it's 6811, maybe it's 6800, but somewhere around there, we've got traders that are going to try and fight. So the big lines in the sand that you are probably going to be best served looking for in the ES are fades that hold. Overnight inventory that gets negative and then turns around and bounces. These are really good areas to watch. I do like that zone from a buying perspective, and this is a very wide angle. Now, what we want to do is see if at the very least we can get into the open of Monday's candlestick, and that's going to give us an inside formation that allows us to say, okay, at least we can still buy dips. Right now, we still can buy dips, but those dips can be quite sharp. Let's take a look at the NQ very quickly. We're going to do the same sort of thing, and then we're going to go back and take a look at the daily charts to see if we're staring down the right things. So, as you know, I always talk about inventory, and the only way we can sell inventory is if we buy it first so that we can sell it. And those areas traders argue about. So, not last week, but the week before last, we held this 24,200 and maybe it's 24,300 area. We held that zone. That's going to be the zone to watch. Notice the NQ is a bit weaker. We have a lot of software selling off. We've got AI selling off. We've got all kinds of weird and strange things happening in terms of what's going on underneath. But the semis, the semiconductors and the chips are still doing fairly well, keeping things afloat. We've got a rotation going on. So what does it mean for price action to breach 25,600? My thought is that the breach here is going to send us right over the top. I don't know if it takes us a couple of weeks, but my suspicion is with all those big selling areas into the close of the day and then the open interest on the rise, it feels like buyers are going to want to come down, see if they can get it on the cheap at these lows, and then move it up the chain through the box. The midpoint of this area for the NQ is 25,260. Let's go to the YM. You know, I should let Otter record me here so that I can add information for you. I'll do that next time. Actually, let's do it now. Okay, so I'm just going to record my voice so that the structure I get, we can write it down, and you'll go, oh yeah, okay, I see what's happening right there, and you won't have to, dig through all of it. I'll get the notes to you in the Topstep channel. All right, so taking a look at the YM, look at how much stronger it is. See? So much stronger. The low edge of the range, remember we want to look at old resistance, new support. It's a little bit messy there, but it really does look like the traders are really intent on holding 49,000 as the support floor. If it loses 49,000, you want to look to the bottom of the box. The YM is a great instrument to trade, especially if you find yourself getting upside down in a trade really quickly. The YM has a lot nicer rhythm. The flow of it is cleaner, and you can be patient while you try to work out your strategies. And yes, it has had beautiful momentum in the near term, and it is clearly in an uptrend. Absolutely clearly in an uptrend. So there you have it. Let's take a look at the RTY. A lot of stuff is happening underneath the RTY. A lot of people are saying, hey, we need to buy these undervalueds. This is a time for value and not growth. We're going to go hide where it's safe. But the thing about instruments inside of the RTY, folks, is most of them are not making money. Most of them are losing money. If you just do a search on any kind of search platform that you have and say, give me a price to earnings that's positive and positive cash flow in the RTY, you're going to get, I don't know, 50. Everything else is going to be washed right out. So that's pretty important for you to realize. So the weakness here can be very amplified. The very strong ones can also move up very quickly, but trend clearly up. Clearly up. The RTY and the YM look a lot better than the ES and the NQ. Okay, let's take a look at micro Bitcoin. Let me delete the drawings here. So we've talked about this since last week. I said, hey, listen, my suspicion is they're going to make a big sideways chopping formation here around 70. This is why I got out at 68, because I don't want to sit around this chop. I honestly suspect that the range that they're going to walk through is going to look just like this, and it's going to take weeks and weeks and weeks and weeks before they decide what's going to happen. Now, could I be wrong? Absolutely. I don't have any crystal balls. So let's draw Fibonacci, and let's use our default. Right, so my default goes in 50s. So I took the bottom of this wave to the top of this wave and accelerated it down. Notice it's right around the 2.5. We'll have a look at it. It easily could come into 50, 54,000, somewhere around there, if it collapses. My suspicion is that it won't, that it's going to stay in a range that is about $15,000 wide. What is the low of this wick? 61, and the high of this wick, 72. Yeah, my suspicion is that we will sit around this area for a while as they try to build structure. So the guy from MicroStrategy, what's his name? Michael Saylor, he said, even if Bitcoin falls off the floorboard and into the dirt, he's simply going to restructure the debt, and he is not going to sell. So I don't even know what to say about that, except, you know, he's swinging big, and he's either gonna, you know, knock the cover off of the ball out of his shoes, or, you know, it's gonna be bad. So that's what we're staring down in Bitcoin. You look for the low of last week to potentially take a trade if you are interested. But losing that low, it still puts us in this $10,000 to $12,000 range that could easily give us a rough time. All right, let's go to oil. Okay, so there's something very important happening in oil. We've got ourselves a pretty solid geopolitical rift. The rift is very strong. We're really trying to get to some sort of central space, but everybody is pretty fractured geopolitically. Certainly, this is not the place to talk about too much macro stuff, but, you know, I just saw a report as I was preparing. I want to read the news and make sure that I see things that are interesting that we could talk about. Even Hillary Clinton came out this weekend and said, hey, you know, we need to sort of reevaluate what's going on with these migrations and sort of bring us back to center. So I believe that people on both sides are seeing the pendulum swift so wide apart that a fracturing feels imminent, and they want to avoid that. And so news is going to be news is going to be very, very interesting. Okay, so this is what we have. We've got a trend event giving us lower highs that we just broke through, and a trend event that brings us to higher lows. So that's what we're staring down. This tells me dips are very likely to be buy zones. Very likely to be buy zones. We are, every week that we get closer to the next contract, they get closer and closer together. Before, the forward contracts were very cheap, much cheaper than the near-term contracts. That's called backwardation. Now they're getting to be a little bit closer in price. Notice how tight the formation is. This is very tricky trading if you're looking for a longer term hold. Great for quick swings and nothing else. Be very careful. The breakout area, $65, and then the move up to the top of the formation takes us to 73.
The market is open.
We can definitely do that. All right, let's go to gold. Gold, these are called opposing wicks, but look at the trend. The trend is still saying buy the dip. So, what are we actually doing? We're coiling for another breakout. This is my suspicion. We are coiling for another breakout. And so, how might that look? Notice old resistance tested support on this pullback here to 4,468. And that was only 2 weeks ago. We were sitting in this area. So a lot has happened. What do the traders want to do? They want to break above the current zone. Do you notice how many weeks / days we are sitting at the $5,000.60? Thanks, Bruno. We do have a half day. So, trading's probably going to be a little bit thin, but if you're smart about it, you can still pick what you want. So let's look at micro silver. Here is silver. It had a very sharp reversal, but it's also holding its baseline. So what are we staring down? 66 to 84. That's what they're trying to hold. We've had 1, 2, 3. This is the 4th week that we've run through the price point near 70. Now, spot, I believe, is just a little bit above 60 right now. And so I would not be surprised to see the price action move down into this zone and then bounce up again. All right. Hey, Coop. Okay, let's go back to it. Let's start looking at some price action. Staring it down, I expect the pre-market to be fairly quiet. So let's take a look at what we normally do and why. And we will use Friday's trading range to we'll choose Friday's trading range to show us what's actually going on. Now, Friday and Thursday were very unique days simply because instead of using the first 30 minutes, I used the first hour to map out price points. And so today, I suspect we might have the same sort of choppy price action. Notice, thin pocket right here. We have not recovered this area. And so this breakaway above 6,900 easily could be a buy stop. Just let it pop out, come back in, give you a higher low, and then run after it. In this particular space, it looks a little bit noisy, but I would not be surprised to see them try and recover. I absolutely would not. So, how do we look at it? We've stared down the charts for the weekly, the big picture. Now, we're going to draw a box around that first hour. And we're going to spread it out to the entire day. So what you'll do is at 7 o'clock, you'll draw that box. I normally use the 30-minute, but the price compression has been so tight that I've had to use an hour. Now, what's the storyboard? The storyboard is always the same. If I break above the high of that hourly candle, that first hour of trading, I break above it, I need to see where my VWAP is. If my VWAP is protecting me underneath, I can buy it with my risk at the top, at the bottom of the candle. If I lose the bottom of my formation and my VWAP is above me, I have the same structure that I want, that I can have to trade. I can take it short with my target down here. Now notice what happens. It comes down and it collides right into the primary body of support, right there at the 1 hour low. So as we come down to that edge and just tick below it, it immediately recovers, gives us more upside pressure. So what's the moral of the story? Look to the left to see where your target could go. And if it comes back into your box, realize that price action probably isn't following you, and then you manage your risk. My thought is usually halfway up the box, but sometimes I will leave it at the top of the box. Notice it moves up, and then what happened the entire pre-market of Thursday is that it sat and collecting inventory. Inventory is long. Everybody bought the low and they're moving up here. And then it collapsed and came all the way down, and they started building more inventory for Friday, where we do the same thing. The goal is just do the same thing over and over again. Now, look at what's interesting here. We are opening up in the same area that we opened up on Thursday night at 6 p.m. So we are in range and in value. You can see that from all of this here. What does in range and in value tell us? What does Hogue always say? Wait for opportunities that sit near the base or the peak, and then try to go from there. If you trade in the middle, you could scalp, but your probabilities of holding are going to be different. They're not going to be as good. What indicators am I using? Actually, I only have one indicator here. It's the VWAP. This is volume. This is a volume profile by visible range. It just gives me a volume profile for everything that I'm looking at. And then I have a momentum oscillator sitting underneath. Oh, thank you so much, Mark. I appreciate that. All right, so somebody says velocity logic on silver. Well, I'll check it out. I'll check it out in a bit. But here's what we're staring down. For me, I'm not interested in a trade sitting here. I'm not interested at all. I want to see the traders come in and test this area well below. So I'm going to put a buy zone here, and I'm going to put a stop sell here, just underneath it. And if it goes up above, then I'll be in great shape. I do think it's going to break out, but not without giving me a little bit of noise on the top. So I might not do a buy stop here until it gives me some better structure up at that region. Okay, let's go to the NQ. And then we'll take a look at that silver event. So here we go. Every day, what do we do? Same thing. You draw a box around that first hour. You could do the 30-minute. Listen, most of you guys that know me know that I do the first 30 minutes. What I'm seeing over the last couple of days is that the first hour of price action is still extremely compressed. And so that 30-minute sort of needs another 30 minutes to get the wiggles out, as it were. So here we are, 30 minutes from Friday. Look, same area. Now let's say in your mind, you're thinking to yourself, wait a second, I've got low here and then really nice motion here. I'm going to go long. You know what? You could. You could, but it's very messy. So if you decide to take a trade and you say to yourself, okay, I want to take this trade, what is the only thing that you can manage? The only thing we can manage is risk. We can't force the market to go up. We can't force it to go down. We can only tell our platform, this is where I want to buy and this is where I want to sell. And that's it. So if you're looking for something like that and you see this big savage wick, maybe it's worthwhile to put an order down at that big savage wick. Right? Maybe you come in just underneath it and then you put your stop sell right underneath that if you're staring that down. So that's certainly something. If you want to take a breakout here, this one's a little trickier because look at the formation. We've got highs here and we've got lows here. That's a little bit of a broadening wedge. So risk is all the way out here. This could be a megaphone. It's been a while since we've seen some megaphones. It really has been a while since we've seen megaphones. We used to see them all the time. Now we don't see them nearly as much. But because we are opening in the same hour that we opened up, at the same price point that we opened up at the same hour on Thursday, it's telling us we are in range and in balance, and the risk will outweigh the reward. That's really what it's telling us. Okay, let's look at the YM because I was touting it. See what it did here. Here's Friday's formation. Same thing. Same sort of thing. We've got a little bit of a topping event. Yeah, I would not touch this. I mean, if you want to scalp it, fine. We'll work through some scalps in just a little bit, but there's a lot of risk floating around here. There really is a lot of risk. RTY, let's see if that's doing the same thing. Ooh, hey, look at what we're staring down here. First chart that we've stared at that is well above the opening range of the prior day from a Globex perspective. This is the Globex opening range, not the regular trading hours opening range. Let's see if it matches any other opening ranges in the near term. I do not see any, but take a look. Here's why I look at these, folks. This is Wednesday night. I'm doing the first hour. Look at where price action stops. Right there at the high. You're going to be able to see that a lot. You really will. So this, if you keep these boxes up, you'll be able to use them as areas that give you regions of interest in the chart. And it will work forward and backward. It's quite amazing. And it just means that traders look at price points from their memory perspectives. Let's go to Bitcoin. Bitcoin had a pretty good day on Friday in terms of holding through its formation. Notice it breaks the bottom and the top. How do we know when something like that's going to happen? What makes us say, I bet that's going to go sideways? Here's the story for that. If you draw the first hour and you get to the top and you get to the bottom, looks like it's breaking out, go to the left, see what it gives you. Literally, I don't know if you can see this very well, but they almost filled the gap right there. So they had a gap fill where they came in and said, I'm just going to sell it down until it gets close to the wick of this prior closing candle, and I fill the gap, and then I move up to the top. You can think to yourself, ooh, I'm breaking out. Yes, look to the left. It's going to tell you where you're headed. If you're supposed to be headed way up here and you can't get there, it starts rolling over, you know the trade is not going to hold. It simply is not. So you could say, yeah, but I don't want to get out, because if I get out, I'll take a loss and then I'll have to get back in when it moves up again. We don't know if it's going to move up again. It could fall right down to the floorboard. It really could. So if it stops moving in your direction, take some profit, raise your stop. So it did a really good job doing that. Now, what's staring this chart down? Well, we've got sellers here, old resistance, new support. So they're going to be buyers trying to hang out here. That'll be the first. I would say, hey, listen, if this is a reflexive buy,
Order
you could easily
filled.
buy 2 of these right here and put your stop, 120 points, $120, and your target would be right up here, the heavy congestion. And you just leave it alone. So it's sort of a 1-to-1, but what do we know? Why do these sorts of trades give us a shot at doing something? One, everybody was selling here, and then they broke through, tested higher, and then they came back, and now they're sitting at the VWAP. That's kind of an obvious place for a trade to go. So that's where you can take the trade. You say, hey, I'm going to give myself $100 of risk. I don't think it's going upside to the moon, but I do think it might hit the top of this opening candlestick, and so I'll give it a go. And it either works or it doesn't. It either works or it doesn't. All right, let's go to oil. So, as I've mentioned, till I'm probably blue in the face, oil is in a bullish cycle. A lot of people are very bearish. Oil, they're very, very bearish. And I simply am not. Because energy is, we can't do anything without energy. And do you see how tight these pre-market formations are? They're beastly. You don't want to trade that. That is just awful. It's really awful. So the goal is you wait for the break and watch the failure to recapture. So here we are, just really zooming up. So what do we expect? Well, let's see. If we expect it's just going to keep running, now there is geopolitical risk. We've got a lot of stuff going on, folks. It's going to be a little bit on the crazy side. But geopolitical risk is real right now, and it's going to push oil higher. Doesn't mean it's not going to come back and retrace, because bigger formations are trying to wiggle their way in and out of these spaces. My thought would be, let's see what Friday's 30-minute candlestick looks like. 1-hour candlestick. If I were to look at this, we could see that sellers came here, and buyers came here at 62.26 and here at 62.40. Both of those areas found buyers. What are we likely to do? Exhaust up here and then also pull back. I don't see it running like the wind anytime soon. So I would look, if you took this long, and wow, what a long. If you took it easily, you could say, I need to take some profit. I need to take some profit, because it does. It looks incredible right here, right? I mean, it really does. It looks incredible sitting up into this area, but that's, who knows how long that'll hold. Wait for it to give you structure that says, oh, everybody did buy here. If they pull back, they're going to try and defend where they bought. And that number is really just above Friday's 30-minute Globex Open, which is $63. So I would kind of look there and see what's going on from that perspective. All right, now let's look at silver. So somebody said something about velocity logic. Listen, these whiz-bang cool things that we talk about are very exciting to learn. If you're like me and you are an absolute market geek, then, it's always awesome to learn. However, just make sure that in the learning, you're learning the things that help you pick better trades or tell you when to stay out of trouble. So notice what happened here. This is Friday's Globex Open, which is really Thursday evening, 6 p.m. Eastern Time. Have a look. See where all these candle bodies are sitting? Look at where it came into. Your eyeballs can clearly show you, okay, that's obviously some kind of support. And now they are moving up into a zone that looks like resistance. I mean, folks, it's making lower highs and lower lows. Doesn't mean it won't move up. It doesn't. And if geopolitical tensions continue to build, we're going to have ourselves a little bit of a pickle. Just saying. We are. We're going to have ourselves a little bit of a pickle, and then this is going to rise and rise dramatically. That being said, it's not doing that right now. So you want to look for these edges to participate. If you said, hey, I see this VWAP, it's long, I'm going long, I'm holding support, just remember that the risk events are all the way down here at the bottom of the box. And that is far away from where price is currently. I mean, that support edge is $76.60. Okay. Lastly, we'll go to gold, and then I'm going to answer some of these questions. All right. So here we are. Looks like Bitcoin is chopping around up there. So here we are in gold. Gold is doing the same thing as silver, essentially. A kind of a bearish candlestick with a pretty solid range. But it's a bit more like the RTY in the fact that it's well above its opening range from the prior day. So what is the trend in the short term? Look at where the inventory accumulated. Buy. They're all buying here. They're all buying right around this edge. So here is our low wick today. So what does this tell us? If we lose 5,021, remember how gold behaves. What gold does is, okay. What gold does is break the ledge, bounce, and then continue if it's going to break down. Anytime you take a broken leg short or a broken leg long, you're going to add risk to that. So let it confirm out of the range before you decide you're going to go either long or short. But we can see it's caught pretty sideways. It is very noisy, and it could be any man's game, literally. And I use the word man as in mankind, so ladies, please do not be offended. All right, let's take a peek at some questions. Okay, happy Sunday. I would love to test Bitcoin lows. I like it much lower. Me too. Okay, what indicators do I use? Thank you for telling me I'm a good teacher. I appreciate it. I appreciate it, Uncle Bugatti. I do appreciate it. I do. It all depends on a trader's experience and skill level. If that is such an important thing, it truly is. It's very, very important. Emery, would you trade at all today with this holiday and the Chinese New Year? Now, that's excellent commentary. For me, the Lunar New Year actually does not end until what, sometime next week? It's big, right? It's a big event. Liquidity will be down because there won't be as much volume in the market because everybody takes that time off and they travel hundreds, sometimes thousands of miles to reach their families and spend time with them together. So in that thin trading space, you are better served not exposing yourself to too much risk. I will trade a structure if it shows up for me. But I notice that if I try to rush in someplace where structure isn't what I'm looking for, if I don't get exactly what my strategy looks for, then I find myself on the back foot. And so it could be that I would trade some tomorrow, but it's more than likely that I'll just be studying the charts. Do you use the high-low of the last 30-minute bar for the gap? Or do you use settlement? Trips, what a great question. Do you use settlement or do you use the high-low of the 30-minute bar for the gap? Well, what I will normally do is use the close of the last candle of the day, not settlement. I don't use settlement by and large. And then I will simply watch for the squishy areas to see what the price action is doing. Sometimes it looks like they're going to break down that low and then recover it, fill the gap and then some and then break out. Sometimes they're going to almost fill the gap and then break out, and then sometimes they'll just completely break down. It is bananas. It's bananas which way it does. So here's what I would say. Trips, you have a strategy. And whatever strategy you use is the strategy that would be best used fitting what you have in your wheelhouse. So if you've looked at it and you say, based on my strategy, I think I ought to use settlement. Or based on my strategy, I think I ought to use the high of the wick. You got to feel it out. It's not exact. And so, in a punt, I would say it depends. CL is wild. Let's go back. Yeah, it's moving up. Right? It's moving up. Slowly but surely, you might go, Emery, I thought you were an intraday trader. Why are you looking at the 30-minute chart? Why are you not looking at something smaller? Because the 30-minute charts tell me where the buyers stopped buying and where the sellers stopped selling with extreme clarity. I can see extremely clearly, okay, buyers stopped there. The tighter I move in, the more wiggles I see in the chart, and that gives me a little bit of a rough go. It gives me a little bit of a rough go. Somebody said I went long the MES. Okay, good for you. I'm sorry about Micah. I know, that happens a lot. Come in Tuesday ready to sell the rip. Interesting. I think so. I think Iran is going to have some trouble. Mandelbrot. I thought I left it. I know. Isn't that funny when we hear those longs or shorts, those things trigger and you go, oh my gosh, what do I have going on in my position? Notice how simple this trade was. I literally walked right into it and went, oh yeah, that's a long. Didn't think about it, had looked at the great big picture first so I could see what was going on, and then I took the trade. Now, if it keeps happening to hold, then I'll walk that trade up, right? And so we'll keep moving to where it's going. Hey, Hoop, my guess is that we roll to April this week the way open and volume is looking in oil. Okay, thank you very much. That's good to know. That's good to know, Hoop. Thank you so much for being here. Hi, Ann. I'm a new trader. Zahir, I'm happy to hear that you're trading. I would appreciate if you would kindly share your A-plus trading strategy for everyday consistent profit. So, Zahir, here's the funny thing. The only thing I ever talk about on Topstep in general is my A-plus setup. And you saw me start it exactly the way I do it every single day. I'll go to the weekly chart. Even if it's the middle of the week, I'm going to go to the weekly chart. And then I'm going to go to the daily chart. And then I'm going to go to the 30-minute chart. And all of those things are going to give me a storyboard. And so if we think about it like this, it's not about, I'm going to use a basketball analogy, and I hope I can thread the pieces together. It's not about the X's and O's. It's about the Jennies and Joes. And so what does that mean? Technical indicators are like your X's and O's, right? Your point and figure charts, your whatever. Those crazy things I have no idea how to read. Maybe Hoop will teach us that one day. But that's what we're staring down. Pure technicals. Oh, it's above support. It's below resistance. It's above the VWAP. It's trending lower. It's blah, 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 blah. We have all of those things holding us together. And we look at the chart and we go, I'm going to make a decision. If I have a crossover on my moving average, that's the easiest trade setup to take. It's got slippage attached to it, but it's still the easiest thing to look at the outset. And so you could stare at it and trade it, but at the end of the day, what you can tell about where buyers and sellers are is always directly related to where did they stop buying and where did they stop selling. And if you understand that, you can say then, they stopped selling right there and trend is up. I saw that. So I'm going to go down there and see if I can get a trade to where everybody really stopped selling and started buying. I'm going to do that. If you can focus in the chart like that and think more about what are the Jennies and Joes doing in here, then you're going to get yourself off to a much better start. A much better start. The reason that I draw these boxes and look at price formations like this is because in order to sell inventory, you've got to buy it. And the best buys are going to be where everybody is around and says, you know what? I'll buy it at that price. I'll buy it there. I don't really like it that this is losing this edge, but we'll leave it sitting there, right? Everybody has been saying, hey, I'll buy it there. I'll buy it around this 68,600. Let's see if we can get it to the top where I can sell it. So that's really it. Oh, that's awesome. Somebody says, Liam says, Coach Hoop, I really enjoy and appreciate your evening Discord sessions. That's awesome. Hoop really gives it his all. He really, really does. All right. So 150K passed. Hey, good on you. That's awesome. That is awesome. Congratulations. All right, so yet every trade takes a buyer and a seller. So she's speaking of trading at the margin where price trend changes or price trend solidifies. Not so much. I get what you're saying, Charles, and you are correct. In the futures market, there's always somebody on the other side of that trade, or you don't get to play. If you want to sell it at X, but there's nobody there, you're not going to get your trade. So what I'm saying is not about, you could say, hey, it's when price trend changes, but you'd have to be on something like a 100 tick to tell that. So yes, in your example, the price trend does change, but trend is really relative to time. Trend is absolutely relative to time, and right now it's kind of caught in a little box. Okay, what's next? Anne Marie, can you show examples of break of structure to determine a higher time frame bias for intraday trading? Oh, fantastic. Let's use one we have marked up. Let's use nat gas. Holy smokes. Okay, well, this is a break of structure. How do we know? What defines a break of structure? Let's do something super simple. You go to the kitchen, you take a glass out of the cabinet, and you put it on the counter, and you slam it just a little too hard, and it breaks. That's break of structure. Very simply put, a break of structure simply means they've stopped trading inside of their boxes. So here's the great big box. Here's the 30-minute chart for, holy smokes, this thing's been moving like this for how many days? What? All right, old resistance. This is how I create an inventory build. I must see old support that turned into resistance. That's going to give me the top of my box. Here, you could see it's falling out of that box. Wow. If it falls out of the box, it's got a lot further to run if it stays outside of the box. My suspicion, and let's do this. Let's go to the daily. So I'm not, talking outside of other parts that don't need to be talking. Interesting. Take a look at this chart. Holy cow. So if you're staring at this and you're like, what the heck am I looking at? Literally, this is a sideways chart. It is incredibly sideways. Now, we are awash in natural gas. We are. There's a lot of natural gas out there because it's a flare-off of petroleum and light sweet and everything. So there's a ton of nat gas out there. And so it's going to have these very big sideways pockets. But it clearly has been sitting in this area for a long time. Now, let's go back to the 30-minute. And what we can see is that we're inside of a big space, but we're still holding the edge of that space. We gap down. And so what could happen here? Let's talk about it. First thing that could happen is somebody says, wait, that's breaking structure. I'm getting out of this trade, or I'm going to sell it. easily they sell it and they can say, all right, what's my target? So you can have structure within structure. That's because of the fractal nature of a market. It tells us that patterns, the same patterns, exist inside of other patterns. And so what would we do? And remember, we're drawing with chubby crayons, not with an architect's pencil. So there's wicks and edges that get very messy. So if we're staring this down, let me see if I've got that properly. Needs to come down just a wee bit more. Old support, broken, recaptured. It does the same thing over here. And so the goal event is to see how much of a downward formation we get in the chart. So let's measure Fibonacci. So here's the measure. High of this congested area to low of this congested area. We could tell they were battling here. They went to the top of the box, came to the bottom of the box, went to the top of the box, came to the almost the bottom of the box, broke out of the box. Let's see what the break size was. Let's clone this. At the top of the box, it really hits that almost on the nose. Old support, new resistance. So we know the measure holds. And now, what are we doing? We're down here. If I take this box and then I clone it one more time, you're going to see why these measurements are so important to me every day. Let me show you. Look at where they're arguing. Right there at the bottom of the box. Now, could that mean anything or could it mean absolutely nothing? Well, it usually means something. And here's what it says. If we get back inside of this box and break above the low, this line here, we're going to try and fill the gap. Now, we haven't had a very good job. We haven't done very well filling the gap. There's this structural drift that's downward that looks pretty nasty. But this is what the break of structure is. It's simply a space where we say, wait a second, were we just buying and buying and buying and just staying in the same spot? That's like a guy who's running a big firm who's called the trading desk where he works and he says, listen, anytime it comes in to 312, I want you to hit the bid. I want you to buy it. When it comes into 312, I don't care what's going on, buy it at 312. And so they just sit around all day and buy it. Through all of that time, they go, all right, he told us to buy it. And, there's a specific contract amount that he wants. And so they do that. If he's a sideways trader and they have it as an algo, they're going to go to old support and they're going to say, when it gets to 318, I want you to sell it. And they're going to run that back and forth for the entire time that they're doing it. Once it stays in there, it's holding structure. When it breaks, it's going to break in the direction of that structural motion. How do you measure that? You use a Fibonacci. You can go high to low, and it's going to give you your potential targets on the upside. Now, you don't hold on and say, no, it's definitely going up to XYZ. It's definitely going here. No, you look to the left and you go, who's in my way? Where was the last place I saw somebody selling? And that is what we will be looking for, right? All right. Must be warmer this week, possibly. these contracts, remember, they're doing the same thing as oil. They're in backwardation. The forward contracts are way cheaper than the current contracts. And so there's this sort of inverse relationship right now, because as they pull petroleum out of the ground, they pull the light sweet crude out of the ground. The byproduct is natural gas. And there's so much of it that they've been flaring it off. And now, as geopolitical tensions rise and oil rises, we're seeing a little bit of a disconnect in terms of how much more nat gas could potentially be flaring off. Also, I think they increased the rig counts last week. Not that that matters that much, because rigs today have become vastly more efficient than they were in times past. Anne-Marie using secret Olympic Italian words. That's very funny. Thoughts on a long to 66.75 in the ES. Let's do it. As you can see, we've had a very relaxing long in micro Bitcoin. It's just hanging out, doing what it's supposed to. We give it some room. We let it move up, let it move down. Don't freak out. You have a small position and you say, I'm just going to work out how this feels, how this looks. And the big thing that I notice in traders all the time, I talk about it all the time, is you being afraid to trade. And here's the important thing. If you said, hey, I'm afraid to trade, my first question would be, why? Are you going to lose your house? Then you probably shouldn't be trading, particularly with that size. But the answer to that is normally no. Okay, are you going to lose a limb? Are you going to have Rumpelstiltskin take your first child? All of these things are no's, and honestly, if you sit back and go, hey, what's the worst that could happen? I could lose on this trade. Okay, if that's the worst thing that can happen, let me figure out how I can make the worst thing that can happen be as small as possible. And so you manage your risk. Does that mean you jump in anywhere you want and then say, hey, I'm just going to have a 2-point stop? Well, that'd be a way to go broke really fast. So you wouldn't want to do that. But what you would want to do is the very simple thing of going, wait a second. Where did the buyers stop buying? So somebody asked the question, thoughts on a long 266.75. So from this formation, I see nothing telling me about that. However, let's collapse to a 500 tick. I like the 500 tick a lot. So let's take a look at it. Opening trade formation. This is the, whoa, that's interesting. Here is our 1800 box. The low, it comes in right into the last structural motion of the day. So we're sitting in a box. And so we're a box within a box. Inventory has been accumulating all the way down the bottom here. We punched up and then pulled back, retested the bottom. And now here we are retesting the top. So the question is long to 66.50. And so, or 66.75. So 66.75 is, let's duplicate this. Oh my gosh, my dexterity is terrible. Okay. This gives me a movement that's potentially up to 60, 68.72. So our 66.75 potentially easily in range. I would guess it's probably 65 as opposed to 66.75, but here we are. Now, the question is, hey, I want to go long there. Okay, well, if we're looking at a 500 tick, we can definitely see them building inventory from the top edge at 66.60 to the bottom edge at 68.60 to the bottom edge of 68.45. So if you take the trade here, what's your risk? You might say, Anne-Marie, I am going to use this area as my risk, and that's 51. Well, now you're at 56. So that's 5 points. And you're going to move up 10 points if it works. So from there, you have the opportunity to do that. What do I like to do? If I had chosen this 56 area to 66, my actual buy zone would really be down here at the heavy congestion. Why? My VWAP is flat. I haven't broken higher in an hour. My 30-minute chart really gives me that last edge. I could get aggressive and say old resistance, new support, but I don't have a break here. So that doesn't look clean to me. What looks clean to me is the dip below at 45, and then if I can get it to 60, that gives me 15 points, and then, I get another 5 if it happens to break out and give me a structured move to the upside. So would I take that trade? I would not. Is it possible that that trade will work? Of course it's possible that the trade will work. But the way I like to trade is I want to get involved where everybody else got involved. I don't want to chase it. And everybody else got involved over here. So you might go, Anne-Marie, doesn't that leave you, staring outside through the window at the party? Absolutely. It leaves me standing while the bus goes by, the party bus goes by without me. However, the only thing I can manage is my risk. And so if the only thing I can manage is my risk, I'm going to work hard to manage it as best I can. And what I'm going to say is, hey, you know what? I'll give myself some room underneath that if it comes into this zone and it bounces, which here's a high, and here's a low congestion, here's a higher high, and then here's another low congestion, I'm going to wait for the low congestion and trade it into the high congestion. What's your take on ICT? I have no idea about ITC. Apparently, people either hate them or love them. My thought is, if it works for you, have at it. Some things make sense to some people and some things don't. For me, I have a lot of friends that trade Elliott waves. I'm going to tell you something. I feel like a shoebox in a room with some of the people that talk about Elliott waves because they are so smart and they can see and count waves within waves and all of that stuff. And there I am, an empty shoebox listening, literally. So it doesn't really resonate to me. But if I look at somebody else that's just talking about, here's where they buy, here's where they sell, and here's where they could buy, and here's where they could sell, and can I frame my risk around that? For a simple Simon like me, that works. Now, I had somebody say the other day, you're not a simple Simon. I'm going to tell you this. I am not a spoon in the drawer. I know this. However, I am definitely not the sharpest knife. And because I have the attention span of a Cocker Spaniel, I have to make what I look at right here in the blinders. I have to be a horse that just puts on the blinders and I can't see anything but exactly what I'm after. And so that's what I would say there. If it works for you, it's great. If it doesn't work for you, try something else. Different strokes for different folks. NQ. What do I think about NQ? Yeah, and there's no holy grail. You know what I mean? There's no holy grail. There's not. What do I think about the NQ? Same thing I think about ES. They're building some kind of structure around this edge. They've been collecting inventory all night, all yesterday afternoon, Friday afternoon, and now they're sitting at the top of the inventory box and trying to hold it. Could they break to the north? Well, as you recall from the very beginning, my initial philosophy was, I think they're going to buy these dips, and I suspect they might buy them really hard. But nothing's definitively telling me that because I haven't broken out. And so that might be a premise, but the only thing that's going to lead me into a trade is looking and going, okay, where did these guys really start firming up price and saying, you know what, I'm going to buy it. And, here's my value area. I could literally take an MNQ down here at 24,761. But this business right here, I'm just not going to touch it. Do I draw angles, trend lines, like that NQ wedge? Yeah, I do. I won't force it. If I look at something and I go, well, that's not doing anything, I will not force it. I'll just let it go the way it goes. So that would be it for me. That's what I would do. I've talked to PAX before, yes. Yes, I know PAX very well. Yes, his 30-second opening range break is because it's what's the word I want to use for that? It's the impulse move out of the gate. So it's pretty interesting. I was looking for 780s on the MNQ. 780s. Not bad. Again, why pick that? Well, because there's a box of buying right there in that spot. My thought would be, well, we don't really have trend. So when we don't have trend, we have a tendency to break those higher lows and come back into the pocket. So that's what I would say. And Harvey, here's the thing. Harvey says, hey, don't brag or promote. So here's the thing. If somebody's excited about what they've accomplished, I think it's okay to say, hey, look what I did. Now, what the rest of us have this tendency to do is feel jealous because we haven't gotten that, or mad because we haven't gotten that. But at the end of the day, Harvey, if you were knocking it out of the park, I know as far as Topstep concerned, we'd be clapping up a storm for you. We want to see people succeed. We want to hear them say, hey, this is what I did. This really works. So, I'm going to say we let Freds be Freds and Emily's be Emily's and whomever. Can you compare 500 tick? I know, Bruno, I'm almost done, I promise. Can you compare 500 tick MNQ VWAP side by side? Yeah, but you know what, Louis? They're not. They're not. Did you learn on your own or by watching the videos? Okay, so you're talking to that person. Donald Key says, I know a successful trader that looks at the 10-minute candle before NYSE opens, and then when it breaks, that works. If you were just starting out or a year in trying to find consistency, what would you do if you were starting all over again? You know what? I'd go to the very beginning of this video and say, okay, what are the simple things? She's got like one indicator, and all she's doing is looking for where people decide to buy and where they decide to sell. If I could give you last piece of advice, if I could tell you exactly what to do, you wouldn't do it anyway. Can I tell you why? Because you're you, and your ideas are going to come into spaces and they're going to contradict what you think you're seeing, amplify what you think you're seeing, maybe making you move in a different space. This is a very individual game. The one thing to focus on, look at that NQ go. I bet the ES is doing the same thing. Yep. The only thing that I can say to you is the following: manage your risk. If you learn to manage risk, you're going to last long enough to make good money. You are. Thanks, everybody. That's it for me. And I appreciate you, Bruno. Appreciate you, everybody that was here. I appreciate each of you. Appreciate each of you for coming in to spend the day with me or the time with me. This, I suspect, once it closes over this edge in micro Bitcoin, it's going to head to the upside, and we'll see what happens. But you know, pay attention. Volume's going to be very thin, and that means traders will be able to shove it around if they've got just a little bit of size. So you want to be careful and you want to study. Thank you very much, futures trader Chris. Always need the Lord to look out for me, and so I appreciate that. Thank you. Good night, everybody. Take care. See you soon.